Well, hello and welcome back, Maverick traders. Good to see you. Joe here on a Tuesday. It's the 20th of August. Let's jump into our market rounded. I've got my 2 cents. You guys know how to follow along and take responsibility. I'm going to break down the meaningful news of the day. Let's take a look at the marks technically and share trades with the community.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
As we move into the market analysis, folks, you're going to see that we actually hesitated. It's been a little while. We've had a pretty strong move to the upside. Not a lot of volume behind it, but not a lack of volume either, but very directional in its approach to just, hey, let's just get back where we started. Straight up to the daily news, the market's hesitated today after a long extension back. However, I noticed there at some key levels. The FOMC minutes, I do believe, tomorrow from Jackson Hole will be in focus. I kind of think that's what led this up to where we're at now. I've had kind of a glass half empty approach. And folks, I'll go on record last week at this time. I said I'd be surprised. I don't see us revisiting highs anytime soon. And we're not quite there, but oh geez, hey, I've been wrong a lot. And it did float up there. But the way that this happened, it was a little bit different than what we've seen in the past. And in light of what could come out tomorrow, it'll be pretty interesting to see. So how do we finish overall? Flat. We had that inside day finally. We've had 3 days in a row, Wednesday, Thursday, Thursday, Friday, and Monday of just strong movement, even after a gap midweek last week. But then we kind of hesitated. I truly believe it is because the markets are going to wait to see what Powell says from Jackson Hole. But here we are, 0.15, 0.2, 0.3, flat. Russell's down just over 1%, oil flat, gold flat. Well, up and down a little bit there, but not a lot of movement. Moving over to the advanced decline line, a little bit more decliners than advancers, 65.31, but it really wasn't the case. It was just a little bit of a slowdown or maybe a little bit of a fall from some of the moves that we've seen over the last couple of days, which have primarily been up. Above below the 50-day moving average is pushing the 64 level, right? We look at 70.30 there, 64, 63. So that's kind of where we're at. So let's take a look at what we're left with when it comes to charting. Now, it's a very weird place for me to be in because it's something that I'm not overly excited to buy into. Now, we do have a bearish crossover here, but take a look at the two slopes here. And it's just because we had such a large move off this bottom. And what I mean by large is it was just up, up, and up. And yes, folks, there are definitely gaps here. This was a gap. This is a gap. This is a gap. This is a gap. Between, I want to say Thursday and Friday, or excuse me. No, that was pretty much open across, but it's just up, 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 up. It could be short covering. It could be bottom fishing. I truly believe going into this Jackson Hole minutes where we're waiting for the Fed to either cut rates or talk about that. And in light of this volume, I think it's a lot more of speculation. If something comes out that the market's like, I would not be surprised to see us stabilize here and then continue higher. However, folks, it's not what is construed as good or bad news. It's how the market takes it. Let's get over to the cues because I've seen it a lot. An interest rate cut would be, hey, they cut interest rates. Everyone's going to spend. It's going to be great. We've been waiting for this forever. We finally got it. Let's buy the markets. Well, it could also be it's the first sign of weakness, and we could see the market sell off. So I don't know which way the sentiment's going to take. But what I see right here is very difficult for me to actually put some sort of sustainable pattern on. It's just, hey, we did get hammered. We got a little bit of a sell-off, and some things were taxed and taken down, and we had a bounce. But this bounce is a little bit larger than I'm comfortable with when it comes to buying into it. So I'm going to keep an eye on this, but here we are, and that's where we're at. So this is the cues. You can see it's back up to some key levels here, above both moving averages, not quite at its high. The SPY was a little bit higher comparatively, but it's in a really good crossing area because it has definitely crossed a resistance area that it set as it was collapsing, and it is above both averages. So this is a really interesting level for these markets to be at technically where it comes to scratch your head and not know what to do next. So there's not much for us to do. Pretty much mixed across the board. Energy, ExxonMobil, Chevron, you can see the darker red over there. Eli Lilly, big winner today. Pan W, it's just kind of where it's at. But overall, just a flat nothing day. I'm not going to change too much from what Corey talked about yesterday. The 20/50 slope is still the only thing that I see. Well, it's kind of the moving average needs to be flip-flopped. But pushing above and below the 20, or excuse me, above the 20 and the 50-day moving average, I'm going to stick at my +1 with the monthly outlook because it's just above those averages. There's nothing to debate. I went from that +2 with this surge to a +1.5, +1 maybe, just because I think it's going to hesitate. Good or bad, it's going to hesitate here. If the news is constructed or seen as good and the markets stay bullish, it's probably going to hesitate a little bit before we race higher. It's going to be very difficult for me to buy into a trade, or I should say anything where the markets can take a move from the bottom through its all-time high in one push. This probably won't be sustainable for too long. It's going to have at least a pullback or correction or some sort of consolidation. And until I see that, I can't really get up into this +2, +3 range. Now, with that stance, I didn't get a chance to really dig into these markets as deep as I want because I really am waiting to see what happens tomorrow with whatever Powell decides to talk about or hint or lean towards. So I'm going to give myself a little bit more time. So I decided I'd carry my trades over from last week and look at some that we didn't. So on the bull side, I still like Sherwin-Williams. This is a nice ascending triangle pattern. It didn't quite confirm for me, but boy, it has almost. So if you're in this or looking for a diagonal spread, it's probably good enough as well. On the sideways, this is ADP, and it's almost looking like it wants to be a little bit more bullish. Now, what I've been talking about, what I expect the markets to do is I would not be surprised if it respects this kind of area. This was after its earnings, had a gap up. We know that there was selling at this level, so I imagine it might struggle here. But the longer that this ascending triangle can push, this might be more of a bullish move than what I have it as a sideways. So sideways to up is kind of where we're going to change at ADP. Then on the bear side, I just like the Bank of America. The COP was one I looked at last week, which I do like. It's also confirming. This one's a little tighter to its moving averages. You can see it just barely corrected last week, but I just love the pattern. I like how it's come up. It's touched this, an increase in volume on some of the bullish moves or bearish moves that we've seen. Nothing's really confirmed yet. There is a huge line in the sand here to where it will probably, once again, wait for some news out of Powell tomorrow. We'll see. So that's where I'm sitting. Nothing's really changed. That's what's kind of cool. I'm just trying to see where sentiment goes, and I'd rather be a follower of that than trying to dig up some brand new trades here. There's no reason for me to do so. So sitting on the sidelines tomorrow might be a good idea. That's what I'm doing. Take a look at it, see what confirms. If things confirm, I'll follow along with my plan and throw darts as necessary. But if nothing really goes anywhere, I'll just sit back and see where sentiment goes. The markets are very focused on the Fed's next move. I know it's funny that the minutes from Jackson Hole, I know that people follow them a little bit, but these seem to be a little bit more focused on that as of late because of maybe rumors of hinting towards a cut, if not cutting pretty soon here. We'll see. What do I know? I'm just following along here. So the minutes are tomorrow. We do have jobless claims, existing home sales. We got the services and manufacturing PMI. And as always, keep an eye on those earnings. They can sneak up on you if you're not looking for them in your trades. It's just nice to be aware. Well, that's where I'm sitting, folks, and we'll see what tomorrow brings. And thanks for joining me. Bye, everybody.